You ever open up a company's annual report and just your eyes glaze over? It's like this dense wall of numbers, and it's almost impossible to see the real story. Well, today, we're going to cut right through all that noise. We're going to uncover the story behind one company's year, Smart Holdings. Let's see if we can piece together the puzzle of their latest financial year. So, this is the big question, right? For anyone looking at a business, how do you really know if they had a good year? Is it all about sales, pure profit, or is it something deeper? Maybe about the big moves they're making for the future. For Smart Holdings, the answer, well, it's pretty complicated. And to figure it out, we have to start with the most important number of all, the bottom line.
And there it is, a net loss of almost 1.3 million Singapore dollars. Whoa! Now, hang on. A loss by itself isn't always a disaster. I mean, tons of ambitious young companies lose money because they're pouring everything they have into growth. So the real question is this a strategic loss? An investment in the future? Or is this a sign of some real trouble? This number, this is our first major clue.
All right, let's break this down with a kind of financial report card. We're going to look at the big headline numbers to get our first impression. The key question is, how does this loss compare to last year? And what about the actual cash coming in the door? Let's see what the data tells us. Okay, this is where the plot really thickens. This is a classic double whammy. It's not just that the net loss stayed the same, it actually ballooned by over 33%. And at the exact same time, the company's total revenue, the money they're bringing in, actually shrink. Just think about that for a second. They're making less money, but they're losing more money. That's the core problem we need to solve. So what on earth is going on here? To figure out why that loss is getting bigger, we've got to pop the hood and take a look at the engine. You see, Smart isn't just one single business. It's made up of different parts. So the question becomes, which part is causing all the trouble? Let's take a look at the breakdown. And wow, this chart just says it all, doesn't it? Look at how incredibly lopsided this is. Over 97% of all their money comes from one single place, their traditional print and media business. That newer smart tech division they talk about, it's barely a rounding error. This kind of dependency is super risky. If that one main pillar starts to wobble, the whole thing could be in danger. So here's the story in a nutshell. On one side, the money coming in from their main business fell, mostly because of fewer media events. But on the other side, their costs actually went up, things like paying staff and covering legal fees. It's like being caught in a pincer movement. Your income is getting squeezed from one direction, while your expenses are pushing in from the other. Less money coming in, more money going out. That is the perfect recipe for a widening loss. So, what do you do when your main business is struggling? You really only have two choices. You can try to fix it, or you can make a really bold pivot to something brand new. Well, Smart is definitely choosing that second path. They are placing a massive bet on a completely different industry, property development. And listen, this isn't some small side project. This is a radical, fundamental shift in their entire strategy. And they're not just betting on property in general. They're betting on one specific place. The company's focusing all of its energy on one of the world's newest nations, Timor-Leste. This choice is absolutely everything. They're trying to get in on the ground floor of a new emerging market, hoping to ride a huge wave of future growth. Now, look at this number, $4.72 million. That is how much the value of their development properties in Timor-Leste grew. Just let that sink in for a second. The company reported a loss of $1.3 million for the year, but at the same time, it was pouring millions into this brand new venture. This is real money, this is real construction happening. All their cash is being diverted from the old business to fuel this new one. So here are the details of this big bet. The project is called Timor Marina Square, and it's already about a quarter of the way done. But the most important part here is the timing. See that catalyst? Timor-Leste is expected to join the ASEAN economic bloc. Smart's entire game plan is to wait for that to happen and then jack up the prices, hoping to cash in on the economic boom that they think will follow. It's a huge gamble that ties the company's entire future to a single political event. Okay, so we've looked at the losses, we've seen the struggling core business, and we've examined this huge bet on property. So what does it all mean? Let's boil it all down to the three most important things you need to know. First off, it was a really tough year for them. Simple as that. Revenue went down and their losses got bigger. Second, the reason for that is pretty clear. Their main business, print and media, is under a lot of pressure. And third,
Their solution isn't to fix the old business, it's to basically bet the whole farm on a new one. The entire future of this company now hinges on this one property gamble in Timor-Leste. And all of this brings us to one final, really critical question. Is this massive property gamble a brilliant, visionary pivot into the next big thing, or is it just a risky, maybe even desperate distraction from a core business that's failing? The numbers tell us the story so far, but honestly, only time will tell if this huge bet is actually going to pay off.